Jose, welcome back. Good to see you again.
Hey, Carl. Good to see you. Thanks for having me.
There's so much to discuss on pricing, but I got to say, one of the things that stands out is some of these growth metrics on Firehouse subs. We can now see why you were so interested.
Yeah, it was a great quarter and a good close to the to 2021, Carl. We're really excited about the performance, sequential acceleration of comparable sales for all brands. A lot of work on the development front, so unit growth accelerated in 2021 versus 2020. We've got new partnerships with Popeyes and Tim Hortons, and Burger King ramping up again. Digital sales grew 67% from $6 billion in 2020 to over $10 billion, which is nearly 30% of our business. So we're really excited, and we had a strong performance in terms of free cash flow generation, which allowed us to return over $610 million of capital back to shareholders in the quarter and $1.5 billion for the full year. As it relates to Firehouse, we love the brand, we love the team. They've done an amazing job. We closed the transaction December 15th, and they closed out the year in line with our expectations, what we had shared back in Q4. And we're looking forward to finding ways to work together to drive the digital business, to drive growth in the U.S. and Canada, and to start growing that brand internationally. So we're really excited about how we came out of Q4 and looking forward to a big 2022.
Yeah. And as far as food pricing goes, I mean, we keep hearing a lot of discussion about how hard it's going to be for it to turn around because of how deep the pricing pressures go into the food supply chain. What's your view on that? And, I mean, are you getting any indications that the consumer is balking on whatever menu price increases you might have in mind?
Yeah, it's certainly a big issue and top of mind for all of us in the industry and for many folks in the supply side as well and distribution side. We have an incredible supply chain team, so we've done a really good job over the years of building relationships with suppliers and distributors. So we're able to use our scale here in the U.S. and in Canada and also internationally to be able to kind of mitigate some of those impacts. But there's certainly tremendous pressures that we're seeing. What's important for us is making sure we maintain a long-term view, maintain a focus on quality, maintain a focus on being able to deliver consistently to our restaurants the best product, the best quality products at the best cost. We work closely also with our franchisees and with third parties to be able to make the best decisions as it relates to pricing. We don't want to get too far ahead of our skis on this because we want to make sure we continue to focus on creating consumer demand. We've been very careful and cautious on that here in the U.S. And also in Canada and internationally where there's a little less commodity pressure. But it's certainly something that we're all looking at, staying close to, and working closely with our franchise owners all around the country and all around the world.
Jose, you touched on restaurant growth, 1,200 net new locations over the course of the year. And, last week, Yum! Brands similarly accelerated new growth in franchises. I'm wondering what you could say about just what's happening in this franchise economy. Are you all finding that you can have greater, density in certain areas of locations? Is it something about people, wanting to start a business instead of getting another job, or the, availability of financing for these locations? What's really happening, and can it continue?
Yeah, what's great about our business is that we have now 4 brands. They're iconic, well-known, and we have penetration and opportunities for growth all around the world. So we're in over 100 countries and territories. And so we've seen growth consistently throughout all of our regions here in North America, in the U.S. and Canada, Latin America, Europe, Middle East, Africa, and also in Asia Pacific. And so consistently what we're seeing is that franchisees, whether they're small owners with 1 or 2 stores or the larger ones that have hundreds of locations, they're seeing a tremendous resilience in this business. Even in the most difficult of circumstances throughout the pandemic, they've seen consumer demand come back to the restaurant space with delivery off-premise businesses growing, our digital capabilities being so strong that they view this as a great investment, a great opportunity for growth, and a great secure investment long-term for themselves and for their families in many cases. So we see that as a key part of it. We've got great master franchisees internationally, which have a tremendous appetite for growth. And so the combination of great unit economics, the resilient business model, and great brands that we have with growing digital presence, we think we're well poised for really strong growth in 2022 and beyond.